All right, what is going on, everybody? Let's have a look. You know what? Today I made $13,000, and I posted this. Honestly, there was a time making $100 in a day from day trading felt like, wow, bro, I'm a machine. Now 13K is like, man, it is what it is. Different levels to the game, yes. Also, when you're coming from weeks and weeks where you're making about $100,000 a week on average, now you're looking at like, okay, 13K, like, oh man, slow. It's a bit slow, but no problem. Also, gotta be happy with whatever the market gives you. I'll show you the trades. There were a couple. There was one mistake that I made from this, and I'll talk about that. But also, in the afternoon, early morning, the market was a little bit quiet. But in the afternoon, it became a Picasso. You see what I'm saying? So, we'll talk about the Picasso strategy. You know Picasso. I'm sure you know Picasso. If you don't, then we have a problem. Picasso. All right, Picasso is this guy. Picasso. That's Picasso. The painter. Is he paints weird shit sometimes. Check this out. What is? I mean, what is this shit, bro? Like, what is this shit? You see what I'm saying? Like, that would have sold for. Like, look at this. Like, the dude's high or something, fucking. And this shit sells for like fucking 50 million. I'm just like, bro, I can do a better job. Like, what is this? Like, he smoke a joint and he's seeing shit. all his paintings like that, bro. Like, look at this shit, fucking. But anyway, he got, made a bunch of money from this, and it's all right. Hey, it's all right. Anyway. So, in the pre-market, I told everybody in the pre-market that what was happening on SPY. There was one thing, the key thing that was happening on SPY, as you can see right here. The key thing that was happening on SPY was making a beautiful level, a beautiful line at the bottom. Okay, now what was this line that was heading up at the bottom? This line pretty much simply means when you see the line that I drew, it's a flag pattern happening right here. You can see. So if it's a bearish flag, it can make a nice move towards the downside. So I was like, okay, it can make a nice move towards the downside. And I post this every single day in the pre-market. And I've been doing it forever now, man. I've been doing it forever now. Like, check this out, bro. I do these videos every day. See, I'm on part 142 today. I posted. Anyway, so that's exactly what happened. It broke below the bearish flag, made a big move down. But early morning, the market was a little bit tough. It didn't happen early morning. I took a few trades. I want to break them down each one by one so you can learn a thing or two from them. And it's important stuff. So let's talk about the AMD trade. What happened? Now, I don't know if you guys know, but I watch. There's different time frames on the day that I watch. All right, first is time frames. Time frames simply means I watch 2-minute chart, 5-minute chart, 10-minute chart. 2-minute chart for first 30 minutes of the market open, 5-minute chart for next 60 minutes, and then I watch 10-minute chart for the rest of the day. That means 9:30 to 10 o'clock, 2-minute chart, 10 o'clock to 11, 5-minute chart, 11 o'clock onwards. I'm watching 10-minute chart. So AMD trade was right at the market open. That means I took this trade on a 2-minute chart. Now, I took this trade and it took forever to move. Because at the same time, AMD and Nvidia, they're sister companies. They're sister stocks. Sister stocks essentially means Nvidia is the older sister. AMD pretty much follows Nvidia, whatever's Nvidia doing. You see what I'm saying? Also, you can watch this on the side. You can see about the market cap of AMD is 270 billion. Still big. But when you look at Nvidia, it's 4 trillion, 4.5 trillion with a T. That's 10, not 10 times, that's like 20 times the market cap of AMD. You see what I'm saying? So Nvidia had 200 simple moving average sitting right at the bottom. So essentially, we took this play, let's say here, and 200 moving average on an hourly chart sitting at the bottom right here. And that was essentially the time when I was looking for a trade on AMD, or I was in a trade on AMD around here, because it came back, made a nice move, came back, retested the critical level, decided to jump in, and at the same time Nvidia had 200 moving average, which I didn't pay attention to. I missed out missed paying attention to this. The moment I realized this, the moment I started cutting this trade, essentially, I think I got in at 3.23, 3.34 ish. I cut it at 3.11 or 3. I took a very, very tiny loss. But it was the first trade of the day. Whenever I'm doing first trade of the day, I'm doing small position sizes, essentially like 5 or 6 contracts, whatever. So $10 a contract, like lost like 50, $60, which is nothing. You see what I'm saying? Anyway, that was the first trade of the day. And then I was paying attention to SPX at the same time. It was looking very good, looking very clean. And this is a strategy that I've spoken a lot of times on this YouTube channel. This is called basketball strategy. This is called disco dance strategy. This is called so many different strategies that we call it SPX strategy. Essentially, every $50 mark, you mark it on your charts. So that means 64.50, 6,500, 6,300, 6,350. But now there always is a zone. So that means around 64.50. So it will be a zone from 64.48 to 64.52. So this is a zone where the prices, if they're coming from a little bit further away, they can reject anywhere in this zone. So essentially, it's a +2 or -2 zone. And now 64.50 is sitting here, as you can see. So the +2 -2 zone is sitting right here. Prices are coming from the bottom, went into this zone. We took this SPX trade, and always I'm paying attention to, there's a difference between 5-minute VWAP and the 2-minute VWAP. I'm paying attention to 5-minute VWAP for profit taking. There's not much difference. Usually there's like $1. Oh, there's always a little bit difference though. 64.41.35. I took some profits, and what happened after that? Prices bounced. So it's very, very important to pay attention to the VWAP around that time. You understand what I'm saying? So I was watching 2-minute chart, 5-minute chart when I'm trading SPX, and essentially, because you know where your stop loss is. If you're entering here, stop loss on the other side, you need to know where your profit target is, so you can understand what is the risk to reward worth it. So essentially, you're risking this much to potentially make this move. It's worth risk to reward. So I'll take this trade. You understand what I'm saying? So that was SPX. Nothing crazy. It was just a simple trade, quick trade, first scalp. And let's say if you have 10 contracts, you take 5 contracts off at the profit target, 5 contracts. For the remainder 5 that you're holding, let's say if your entry for these 10 contracts is 3.3, if the contracts have gone up to, let's say, $8, your stop loss is break even. You don't want to lose the money that you have already made on the first 5 contracts. That money is yours. It's in your pocket. Like Nipsey Hussle says, bro, all money in, no money out. Once the money's in my pocket, it's no leaving, no way. That's essentially what the mindset that I always operate by. You understand what I'm saying? So it was absolutely beautiful. And then I hit my break even. It is what it is. No problem. And then there were a couple more trades. I was taking left and right a little bit here and there. But again, everything was structured. It was no emotional play. There was a mistake that I made a little bit later, which I'll talk about in a minute. I was watching this Tesla, see if Tesla gives me some sort of entry, right? And I liked how Tesla kind of came back, but still no. The reason why, around here is when I've started watching Tesla. I'm like, oh, Tesla looks good if Tesla breaks, because why? Tesla broke above the pre-market high, broke above pre-market high, yesterday's high, made a big move up, broke above the ORB, and this is ORB. And what's ORB, by the way? ORB is the range of first 15 minutes of the market open. First 15 minutes of the market open, that means your first candle, the moment where the price is open, or the highs, not with the moment the price is open, sorry. That means the range of the 15-minute chart. So that means you go on a 15-minute chart, wait for the first 15 minutes, mark the highs and mark the lows of first 15-minute candle. All right? Or you can also use an indicator for that, by the way. So you go here, you search ORB. This guy by ZZZ Crypto 123, okay? Just click on his name. Once you click on his name, make sure you do the settings this. Visibility, turn everything off, minutes 1 to 15. Style, whatever you want to do. Inputs, very important. Make sure it says 15. Make sure you select 9:30 to 9:45. Inputs in status line, press OK. Okay, moment you press OK, the first 15 minutes highest point and the lowest point, the first 15 minutes will be marked on your charts. It broke above this ORB, came back, retested this, made a bounce. I didn't take that trade. Then it prices made a new highs, started pulling back around this critical level that I was watching, which was coming from a couple of days ago. As you can see right here, this is the price point where the price is rejected and made a big move towards the downside. So I was like, okay, we broke above that level, which was previously, you need to understand this. Previous support levels, previous resistance levels. For example, this is a previous resistance level. If we break above it, it will be a new support. Why? Try to understand support and resistance levels as in different levels of the house. Let's say you live in a double-story house. You are standing right here, and your wife is standing up there, right? She's folding the clothes, and she's like, hey, can you come here for a minute? And you're like, okay. So now she's upstairs. Her floor is your ceiling for now, right? Her floor is your ceiling. So you're like, okay, so you catch the stairs, you go upstairs. Now you standing here, right? This is you. What happened? Your previous resistance, the moment you break above that, your previous resistance is your new support now. You understand what I'm saying? Essentially what happened here, the previous resistance that we had on the charts right here, if it breaks above this, this can be new support. And that's essentially what I was watching. I'm like, okay, this looks nice. Let's see if we can make a move towards the upside. Now, we entered the trade. We're in the trade now. I took this entry. The price made a big move towards the upside. Understand this. At one stage, this candle was all green, and then it turned around. And we exited. We understood that this is going to be a trap. Why? Even though the price has moved up, the contract value where we entered, let's say if the entry price was $4.15, bro, the contracts, even though the prices are going up, the contracts are stuck there. 4.15, 4.10. And I'm just like telling everybody, I'm like, guys, you know what? This doesn't look good. It's like, why? I'm like, this doesn't look good because of just one simple reason. Even though the prices are moving up, our calls are actually dropping in value. This looks like a trap. Smart money is selling these calls. Smart money is more interested in puts. There's no many people buying the calls. Because no many people are buying the calls, that essentially means the demand is not there, which is why the prices are not moving the way it should be moving, even though the stock is moving higher. So guess what? What did we do? We fixed our mistake. So if we entered at 415, even if I have to get out at 410 or 405 or even $4, losing $15 on a contract is way better than losing $100 on a contract while you have 20 contracts. I'd rather take a $300 loss, no problem, and fix my mistake if I don't feel comfortable. You need to understand this. If you do not feel comfortable in a fucking trade, you took the trade, stop. Just cut the trade down. It's okay. You understand what I'm saying? Very, very important. That's good. Now, we exited, and you want to know what happened? We saved ourselves from this bullshit. That's what I mean. Now, I was sitting here, I was like, okay, 11 o'clock hit. We'd go on a 10-minute chart. I was sitting here, I'm like, oh, yeah, everything's going down. Can I find a trade? I didn't find a trade. I had a little bit of a headache, so I kind of called it. I was like, you know what? I'm out of here. See you guys later. Goodbye. And then, because I had a headache, I had some medicine. And my parents always told me, if you had a medicine, let's say I had some paracetamol, because I was not feeling well, bro. Anyway, I had some paracetamol, and my parents always said, after you had a medicine, make sure you go to bed, even for like 20 minutes, so the medicine can kick in quicker, because your body's not doing anything else but breaking down the medicine. So what I did was, I went to bed. I'm like, all right, you know what? I'll go to bed. Done. And that's when I made a mistake. Now, I'm in bed, bro. I'm trying to sleep. And what happened is, I think at this stage I was sleeping. I slept maybe roughly around 11:30ish. That's where I was like in bed. I was sleeping. And then this happened. We started making a move towards the downside. I'm on a 10-minute chart. And roughly around here, I was turning around. I was like, looked at my charts because I'm addicted. I looked at my charts and I was like, bro, this looks too good. And now this is a 10-minute candle. You might think this is too fast. No, this is a 10 minutes setting up this move. At the same time, while I look at SPY, I'm just like, bro, it went back, retested my critical level, broke below it. Clearly, in before this critical level, I have this critical level from the pre-market. It broke. It bounced off this critical level before. Now broke below, went back, retested. So there's a lot of confluence. Confluence simply means when there's more than one reason for you to jump into a trade. Now the first reason is break and a retest of your critical level. Second reason is we are holding the Fibonacci levels. Third reason is we have 8 exponential moving average running across. This, I'm like, oh my god, this looks so nice. Then fourth reason is QQQ is looking decent as well. I'm just telling myself, I'm like, man, this looks really, really good. So what I do not take a trade from my phone because of some past mistakes that I've made, and where I'll take a trade from my phone and I will not be able to manage everything so quick because now I'm loading up the position size. I'm like managing the trade. Now this is a mistake I made. I took the trade from my phone. I entered there with the stop loss literally on the other side. I entered there. Prices did make a move down. Prices did make a move down. It kind of started setting up for another beautiful setup. I was like, oh my god, please. And now this is where things started going a little bit funny. I was taking profits along the journey. Here's a problem that I made. I was trading P&L at this stage. Now, even though the trade's working for me, I'm trading P&L simply means because on an iPhone, I can only watch one thing at a time. I was like, okay, rather than me watching the charts, let me just watch this. If this option contracts are moving towards the upside, that means I'm getting paid. Here is when the option contract started, taking a little bit of a hit because the prices bounced. So I started selling a little bit. I was nicely in profit. Hey, these contracts really, really moved. I was doing same day expiration contracts, 0 DTE. And for people who are like, oh, that's risky. You're doing same day expiration contract. That's not something that you should do. No, maybe that's not something you should be doing. But you gotta understand, this is me. Just so you don't know. I was so fat then. Oh my god. Anyway, but look at the 0 DTE. Boom. Man, I was bloody. Oh, yeah, damn. I lost so much weight from that photo to now. No, that's not me, by the way. That's my twin brother. Yeah. That ain't me. Anyway, so started taking profits, and this is what happened. Really quickly made a big move down. And that's exactly because I looked at my charts. I went back to my charts. I'm like, it made such a big move down. My contracts paid. And I'm like, oh my god, 6,400 sitting at the bottom. I don't want it to bounce at 6,402. Because remember the basketball strategy that I explained? I'm like, I don't want it to bounce at 6,402. Oh my goodness. So I went really quickly there. I didn't even pay attention. I was not paying attention to the charts. I'm selling. Because, bro, I got only one screen. I'm laying in bed like this. I'm selling. And this looks small, bro. It's 1, 2, 3, 4. 40 freaking minutes of me laying down there with my one eye open. I'm watching this shit. I'm like, I don't want it to bounce at 64.2, even though the prices didn't actually hit 64.2. And guess what? I was out. And then it actually did end up bouncing. And I looked at it, I'm like, oh. But because on my phone, then I'm like, why did it even bounce here in the middle of nowhere? It actually didn't hit 64.2. But you know what? I just rolled over. I was happy. And I slept. That's essentially what happened. This is the mistake I made. Now, it could have gone south big time as well. The reason why I say that is, if this trade would not have worked, bro, I would have lost big money. Why? Because this big move, $15, $16, $18 move down, definitely paid on same-day expiration contracts. Is this something that I should have done? Keeping it real? No. Why? Because first, I'm not feeling well. Second, I've had some medicine. I should be freaking sleeping. I personally think I just slept for a little bit, like 30-minute, 20-minute nap that I had that made me feel like, let's get it. I should have been relaxed. But that was a little breakdown of my trading day. You see what I'm saying? And afternoon Picasso, just essentially what I'm trying to say is, when you're watching trades in the afternoon, please draw your trend lines, mark your levels, mark your stuff on the chart, see what's going on. if you do not mark your stuff, if you do not mark your lines, if you do not mark your zones where the prices can bounce, you might end up getting caught up into a trade which you never wanted to take in first place. You understand what I'm saying? Mark your stuff. Be the Picasso. I showed you his drawings. It wasn't very good, but he still fucking ended up making a lot of money, and his art is still the most respected art probably out there. Of course, after Mona Lisa, you know. So yeah. So that's it. This was a trading day. That's how I made 13 bands, and I could have made more if I was sitting in front of my computer. I had my position size small. I think this was over 100% trade, by the way, so just so you know. But anyway, this is it. I'm out of here. Make sure you let me know in the comments if you watched the whole video, because I didn't want to actually do the video about whatever, man. I'll do it. Let me know in the comments down below if you actually watched the whole thing, and throw a like, subscribe, and if you want to learn how to do this stuff, all this from me personally, just check out the first link in the description box below, and I got you.